Well, g'day to everybody. Thanks a lot for joining me on this Monday afternoon market recap again. The volatility and relative uncertainty persists in the financial markets. The Dow Jones Industrial Average today intra-session did break below that of the October and also November swing lows. This macro support area that we have been paying very close attention to see whether or not it is going to hold. Well, as at the close on Monday, we did once again print that of a hammer candlestick, technically speaking, at a macro area of support, which is that of a bullish signal. However, we still haven't seen any follow through to the upside at the moment. Every time, or at least the last time we printed a very similar candlestick, was taking us back to Thursday last week. And again, most of that reversal was negated as at the price action on Friday. So really the way in which we're breaking down this market again is as follows. At the moment, you can see that we are coming down very close to the macro 2018 calendar lows. We've been down here on a number of occasions. I'm still under the suspicion that when we look back in the year 2018, a lot of people are just going to call it a year of consolidation, whereby the market more or less moves sideways in a macro sort of rectangular pattern between support, which is very close to where we're currently trading at, and also this resistance up here coming in at around 26,500 on the Dow Jones Industrial Average. If you pay attention to the bottom right-hand corner of my screen, we also have a couple of very important trend lines that are really coming off from the previous bull market back, which really peaked out in 2007. These are projections into the future, going off different areas, of support and resistance that are also underpinning this market or coming down very close to this green rectangular box as a whole. If I bring up the oscillators also, this is quite interesting. And if I go out into a larger fractal on the weekly time frame, what you can begin to see is that these oscillators are still, or at least very close to, pushing into short-term oversold territory, and generally this works in that of intermediate corrections. This is something we spoke about over the weekend in that pro analysis class, and although it isn't technically a buy signal, it's something very interesting to pay attention to, because the last time we got this type of reset was again really in the first quarter of 2018, which laid the platform for what was a very strong little bullish trend continuation off from this macro support. Again, think about it in terms of the larger consolidation for the calendar year 2018, which set up a bunch of really great bullish trades off from the support area all the way up into what has most recently been that technical all-time high for not only the Dow Jones Industrial Average, but also the S&P and the NASDAQ. Now, I understand that the sentiment out there at the moment is extremely bearish. That is a very natural sort of symptom of the current market conditions. But really, as a whole, you need to understand that this market is relatively uncertain in that it doesn't really know, at least the consensus at the moment is still battling to find control for future direction. I mean, I cannot sit here and tell you 100% that this market is going to rise over the coming next couple of weeks, or it's going to break down below macro support over the coming few weeks as well. What we need to pay attention to, however, is the simple fact that we are holding still at support. We're still printing also a lot of reversal candlesticks, and as we go up into larger fractals as well, we're starting to see some very positive signals, as well as when we talk about sort of short-term positive divergence, which is starting to set up on some of the oscillators as well across the market. So we're going to have to sit on our hands, wait and see whether or not this hammer candlestick, as at the close on Monday, really leads to anything definitive in that of a reversal. At the same time, we're really not taking any short positions on this market at the moment. We began taking short positions back in the month of October as the market began to break down. That has run its course, and really since then we've just been waiting more or less, and also optimistically when it comes to our perspective and forecast of the market, to begin nibbling on initial bullish positions. Those positions at the moment are still holding up at macro support, and it really is just a game of patience at the moment, being patient for this market to throw out a definitive signal upon which the majority will eventually pick up on. We've picked up on the simple fact that we have in the past printed that of island reversals to the upside. At the moment, they still haven't really played out as, you know, as what we would have liked to have seen them play out. But again, technically speaking, we haven't done any major damage, so to speak, to, you know, the grassroots of this bull market. And again, I keep reminding people the very important rule that a trend is assumed to be in effect until it gives us definitive signals that it has reversed. I'd encourage you to rewind the video maybe 10 seconds and listen to that again. I will repeat myself. A trend is assumed to be in effect until it gives us definitive signals that it has reversed. So again, as the market remains relatively volatile, a lot of uncertainty out there, what I can tell you is that as long as we remain above, if I can zoom out and bring this up on the weekly time frame for you, as long as we really hold up really above 22,500, this market is still technically both macro and intermediately in a bull trend. And while I'm on that note as well, you see this dark sort of purple trend projection. This is coming off from the calendar lows, not so much the calendar lows, but also the bull market lows. If I can change this into a closing line from 2009, and if you start working with the decelerating fan lines, that's number 1, number 2, number 3, and this is the 4th decelerating fan line, which is the purple extension into the future. Technically speaking, I know this isn't going to make people feel all that well, but I just wanted to make the point that this market could go through a very significant retracement. This is not what I'm expecting to happen at the moment, but I just wanted to point this out. And technically speaking, as long as we held up above 20,250 at the moment, which is really where this trendline projection is, we would still technically be in that a macro bullish uptrend. But obviously that's not going to happen until we start breaking below the 2018 calendar low, something which we haven't done yet. And again, as we push on back down into support, into generally oversold territory, we are still looking for reversal candlesticks such as today to actually set up that of a reversal, which I do believe is going to take a lot of people off guard. And I do believe it is going to come very, very quickly when the market chooses to rally, which I think is going to be sometime towards the back end of December. But who knows, it may come a lot sooner. Also, everything I just spoke about with the Dow Jones, again, is still current to the S&P 500. I don't think I need to really go into the S&P 500 in as much detail. I'd rather spend my time talking about the NASDAQ, but I just wanted to point out we've come on back down. We've retested these calendar lows. But again, we've printed some form of a hammer candlestick at support. I'm not sure if this is going to be the ultimate base for the market. I mean, it has happened very quickly. It has been a very abrupt sell-off. Generally, when you see basing patterns, it does take a little bit of time for the market to turn and reverse. But as volatile and unpredictable as this market has been, as I'm just sort of overlapping the actual price action at the moment, I mean, it really wouldn't surprise me if we just priced in that of a V bottom and just rallied to the upside as well. So again, not really doing all that much, just patiently watching the market from a distance and really taking, or at least waiting for the right opportunity to either add to bullish positions that we've already established or to change our course on the analysis, which at the moment still doesn't have enough weight of the evidence to really change our forecast from that of ultimately a bullish resolution to currently what we find ourselves in since this correction in the first part of September, October. Now, what is interesting to point out, and again, I've spoken about this on the YouTube channel and also in that pro analysis class over the weekend, but really that is the parallels between the NASDAQ itself and some of these gap refills that are taking place. Noticeably today it was Apple. So although the NASDAQ, again, it's still under that of a correctional type of move, we have pointed out that Apple itself has had a very important gap taking us all the way back to April, May 2018. Now, we've highlighted 167.20 for good reason. That is essentially the gap close. I wanted to point out today that Apple itself, it overshot it. We opened at very close to $165 a share. I know this candlestick doesn't really, I mean, it looks rather marginal in and of itself, but taking into consideration where that gap is and some of the divergent signals taking place, I mean, this is technically that of a bullish reversal signal right at our sort of highlighted area. You can see this green rectangular box on my screen. This is the gap close again, taking us back a number of months. So Apple, it has moved quite a distance from 230. It's currently down at about 170 at the moment. It has gone into about a 20-25% correction at the moment. Which is pretty decent, but at the same time, we've closed the open window, which is something that we've needed to do. This is overlapping, of course, with the market activity that took place today in the NASDAQ. You can see we gapped on back down. Surprise, surprise to our target, 6,910, and we started to print a reversal, another lower wick. Although this isn't as strong technically as the Dow and the S&P, I do believe the Dow and the S&P closed negative. The NASDAQ was up today. You're starting to see potentially parallels between what has been a very healthy sort of reset, a shakeout of a lot of those over-aggressive longs, and also just an overextended, overheated bullish market into that of a natural sort of rebalancing of longs and shorts to really begin the process of potentially higher prices over the coming months. So pay attention to Apple. Again, we've been calling this a very opportunistic time to potentially enter into Apple. Personally, I haven't done so at the moment. I do need a couple more candlesticks to really confirm my initial suspicions, but I did want to point out as Apple comes on back down into support and as the NASDAQ once again comes on back down into this critical area around, what is it, 6,900, 6,890, you can see that we're starting to once again print some bullish candlesticks. And this is also, right, again, as Apple has come on back down and potentially even overshot this gap a little bit, which is where we opened as at the first session of this week on Monday. So keep an eye on that. I think it is relatively interesting and it is worth a little bit of your mental energy at the moment. As a whole though, again, a lot of these stocks really going nowhere. Amazon's one of the better performers above 1561 still at the moment, still holding up. So I mean, optimistic on Amazon moving forward. Boeing Airlines, I mean, it still hasn't come down to $300 per share. This dashed line here, it means that although you could technically make the argument for a bullish trade, it was something that we didn't do. Whenever you see a definitive straight line, it is a trade. So I'm going to take this off my screen at the moment just so it makes the illustration a little bit clearer. But again, we have closed the open window, interestingly enough. Baidu is still holding up very close to its long-term trend line. If we go out to the monthly chart, you can see since 2009, we're still holding up with a series of high lows. Although the monthly candlestick in the moment looks horrendous, we've done similar things in the past, but we have also seen some very strong reversals off from that bullish trend line. Caterpillar is very close to coming back down and closing its open window at 118. It has got a little bit further to go. Again, you can see this dashed line here, and the argument for this was because it was rather futile in that no matter how high up we went, ultimately we had to come on back down and close the window, and that seems to be under progress at the moment with Caterpillar. So for those of you who are waiting for the trade, it is coming to us. It just has to drop a little bit further. Hopefully it does do that over the next couple of sessions so we can be done with that. COP is one of my favorite types of setups at the moment. Even though it has pulled on back down below 66 and 67, you can see where X marks the spot. This green rectangular box on my screen, also above this decelerating fan line as well, or accelerating if you are taking into consideration the lower fan line below. So again, a lot of these stocks coming back down into macro support, which does sort of tend to fit into the overall market analysis. CVX, again, still trying its best to come on back down and close this open window. It hasn't achieved it yet. Very similar to the Caterpillar type of setup. Google has been under a little bit of pressure most recently. It is relatively unchanged, so to speak, with the actual pricing. You can see 1,051. Entry was 1,067 a couple of weeks ago now. It has pulled back, but it is still holding above that 1,000 technical sort of psychological area of support as well, which is good. So I am still optimistic on this. IBM, again, relatively unchanged. We are printing short-term bullish divergence on this particular stock as well, simply holding on to this. Netflix is largely moving sideways again. There is still the possibility that we see some short-term capitulation on Netflix, which will take us all the way down to about 230 or 228. I don't know if it's actually going to come. We might just come down to 250, so to speak, where we have in the past and actually sort of held. I mean, it makes a lot of sense. But overall, a lot of these companies and individual markets are pushing short-term into incredibly oversold conditions, which makes a lot of sense. We have been in about a two-month correction, a little over 2 months now. And I think this is all naturally just running its course. I don't believe the market is going to crash whatsoever. I don't believe we are in the beginning of a bear market either. Not until, again, we see definitive signals that this bullish uptrend has reversed. And really, if you take into consideration we're only largely down roughly 12%, so to speak, on the Dow Jones Industrial Average. I understand, obviously, before you get to 20 or 30%, you have to be down 12%. But again, we're just not breaking any of these very important support areas. If we do that, well, then our analysis will shift. But until that happens, I am still optimistic about the outcome of this market moving higher over the coming, months, if not into the back end of 2019 at the moment. All right, so that's going to do us as at this Monday afternoon market recap. If you have any questions, email me, success@pivotpoint-trading.com. Otherwise, I'll see you later in the week for another market update. All the best, everyone. James signing off on behalf of Pivot Point Trading. Goodbye.